Hi, and welcome. Today, we're going to talk about what's the difference between a first party and third party special needs trust. I'm Eric with First Marital Disability Trust. If you're setting up a special needs trust, one of the first things you'll need to figure out is should it be a first party or a third party trust? Let's break down the differences fast. As a quick note, this video is just general information, not legal or financial advice. Everyone's situation is different, so talk to a qualified professional before making any changes. A first party special needs trust is funded with the beneficiary's own money. That could be a lawsuit, settlement, inheritance, or back pay from benefits. A third party special needs trust is funded with someone else's money, usually a parent, grandparent, or family member planning for the future. Here's what matters. Both types protect eligibility for Medicaid and Supplemental Security Income, SSI, if set up and used properly. First party trusts are subject to Medicaid payback when the person passes away. Third party trusts are not. The money left over can go to the other family members or charity when the individual with the disability dies. First priority trusts are often used reactively when money shows up unexpectedly. Again, that could be a settlement, it could be an inheritance, anything where the money is left directly to the individual with the disability. So if you have a life insurance policy and you leave the money to your son, let's say John Smith, and the beneficiary of the life insurance policy is John Smith, that money would have to go to a first party special needs trust to avoid affecting the benefits. Or you could plan as part of your estate planning and set up the third party trust in advance. And in that case, you would set it up for, and this is not the exact language you would use, consult with your attorney, but it would be something similar to the effect of a special needs trust for the benefit of John Smith. The key difference there is the vehicle where the money is going. It's going to a special needs trust and not directly to the person with the disability. Both types have to follow the rules. You're not allowed to give cash gifts or direct payments for housing if the person is on SSI, and all spending must benefit the individual with the disability. Now, that is part of what's called sole benefit rule, and we will talk about that in later videos. But it's important to note that you cannot spend money from a special needs trust for somebody other than the person with the disability. So if you have a trustee, these are rules that they're going to be following. That's the difference. First party is equal to their money, Medicaid gets paid back. Third party is somebody else's money, no payback. Another thing to keep in mind is if there's a payback required and there is not enough money left in the first party trust to pay the state back, then the state doesn't get all the money that they are owed. It just, they take a loss. Let me give a clear example. Let's say the individual has a Medicaid payback of $100,000. In their trust, they have $50,000 remaining when they die. The state would be able to claim that $50,000 remaining in the trust, and the $50,000 that is not paid back, they just have to take as a loss. There's nothing they can do about it. Even if the individual had a third party trust that has $1 million left in it, they can't touch the money in the third party trust. If this helped, please like and subscribe for more breakdowns on trusts, benefits, and disability planning. If you have questions, please drop them in the comments or reach out info@firstmdtrust.org. Thanks for watching.